thanks for joining me on my market report. My name is Mike, and this market report is about mortgage rates. We kind of like to get into what is impacting mortgage rates on any given day. We kind of look at the week ahead, what if there's any catalysts that might affect rates on a dramatic level. We also kind of let you know of if there's any volatility or if it's just the sentiment, the economic data, whatever it might be impacting rates on any given day. A little bit about myself is I am a loan officer. I do work with a national lender. If you guys got questions about anything regards to mortgage rates, uh, about mortgage programs out there, process, I'm here to help. So please reach out via the social media site you found this on. We're here to help you out as much as possible. If you're looking to refinance or purchase, we love to earn your business, so please give us a shout. We do got a lot of different great programs and rates, and we can definitely help you guys out. In the meanwhile, why don't we just jump right ahead to the economic data for today? Today we do every week we get these aren't highlighted because these aren't real important, but I just like to kind of touch on them a little bit, at least glance at them. Every week we get the MBA sent out their uh, mortgage loan activity report, and as we can see here, purchase side went upwards, so more people are applying for mortgages last week for purchases, whereas the refinance has gone down a little bit. Something else to kind of look at is import prices because the talk lately has been about inflation. So we saw a drop in import prices, which is obviously good news right there as well. So let's get into what really is important today, and we'll start off with the Empire State Index. This is talks about the business and manufacturing in the New York region. So this is for the month of September. So August, it dropped up. It was higher than this. It dropped down to 18.3. Forecast is supposed to remain that around that at 18, and it had a huge spike in September to 34.3. Now we also got industrial production. It's for the month of August. So July, initially came in at 0.9%. However, it was revised slightly lower to 0.8. Forecast was coming at 0.4%, and it came in at 0.4%, just as expected here. So, pretty good data today. So we're pretty happy about that. And not only we are happy, but investors are happy. So the stocks are up today. They are trying to. You're not going to see. You're going to see some choppiness here, probably up until next week when we get the FOMC. There's been a lot of uncertainty as to which way to go, even though we had the bad jobs data, even though some Fed members had talked about tapering sooner than later. However, inflation data earlier this week, if you recall, yesterday we had the CPI report and it came in lower. So it seems like we may have reached our peak and it looks like it could start subsiding now and working its way down. What does that mean? It means that the Fed may not be in an urgent need to raise or to taper now that inflation may be under control or not be posing the problem as they may initially thought, and may focus more on jobs. So they may want to see more jobs data before going ahead. So again, so next week we'll determine if we will be tapering this year or if it will be beginning of next year. So if they don't announce that they're going to start tapering at this meeting, most likely it will probably happen around November, assuming that the data that they're looking at improves to the point where they can announce it, and then they'll probably start the tapering probably around January. So also, investors are noticing China is having a harder time. Some of the data that came out of the economic data coming out of China wasn't too good, especially retail sales. A lot of it, of course, is the lockdowns that they're having over there and the increase that they're having in a few of the provinces, and they're kind of struggling to get their economy reopening a little bit further. And of course, that could have a global impact on the rest of the world here. So let's see how this is playing out with mortgage rates and see what we're doing over there. We actually started off the day higher. As you see, we started off here just a little bit higher than where we ended yesterday, even worked our way upwards. But as we got later in the day, because right now it's afternoon on the East Coast time, later in the day in Europe, the bond market started slowing down and weakening it over in Europe, which kind of brought that over to here. We're getting a number of corporate bonds being released, and that's kind of creating a lot more competition with mortgage-backed securities and treasuries, and of course, other European versions of those as well. So based on that, it weakened our stance, and so a lot of lenders Came in with better pricing, however, worse than that pricing. So right now our pricing is down a little bit from where we ended yesterday as a result of that. And then here's Treasuries. It did spike a little bit further. So we were down here, down to about 1.28 range, 1.27. Yeah, probably 1.28, and then now kind of spiked up towards the 1.31 level right now. So again, rates a little bit worse today. As a result, expect a little choppiness until we get some clarification from the Fed as to if they're going to start tapering this year or next year. Tomorrow we do get the retail sales, so that could be a big market boost as well. Go one way or the other. And again, I'm here. If you guys got any questions about anything, or if we can assist you with anything, we'd love to earn your business. And if you guys like these videos, please smash that like button. You certainly help out our channel. We greatly appreciate your views. And we'll look forward to see you guys in tomorrow's video. Thanks so much for watching. Have a great rest of your day. Bye-bye.